First of all, we're an institution. So the life expectancy of an institution is forever. Like if you're a company, right, the company will transcend, it will last past me, right? I'm not a family, right? The life expectancy of a family depends upon the family. It might be 100 years, it might be 10 years, right? It might be you're a solo dude and you're thinking, I just need to have a Lambo in 3 years and nothing else matters but a Lambo or whatever. Institutions have a longer time horizon. The second is we're a profitable institution. So if you're an individual and you were trading in crypto and you needed to pay your bills and you worried about health insurance or you got married and you had kids and you want to put your kids in, you want to get a house or buy a car, well, you have near-term cash requirements. MicroStrategy generates cash, right? When we came down this path, we concluded we would always generate cash. And the reason we concluded this, Kobe, is there's a massive digital transformation, and we realized that no amount of throwing money at sales and marketing will actually grow our business. We couldn't throw money at it if we wanted to. We tried it. It's advantageous to be in business 30 years. Like I've gone through a period where I'm like, I'm going to hire 400 engineers. I'm going to go spend $20 million on marketing trade shows. I spent $20 million on ads on Facebook and LinkedIn. Ask me whether they work.
I'm guessing no, but did they work?
No. They don't work. They don't work. I've spent $500,000 for 2 days of a trade show. I've been there. I've done all that stuff. So I got to the point where I realized that we really couldn't throw money and capital at the core business and make it grow. We had a cash cow. And the problem with the cash cow, by the way, is if the money supply is expanding at 10% a year, which is what it was from 2010 to 2020, if your top line and your cash flows don't grow more than 10% a year, your stock will tank. So the only way to avoid your stock tanking, if you want your stock to be a store of value, you have to grow your cash flow per share greater than the rate of the monetary inflation. This is why Amazon works. Amazon, Google, Facebook grow 20%. That's why they work. This is why Apple bought a lot of their stock back and leveraged up, right? If you can't grow your top line, you either do acquisitions. This is why Oracle bought a lot of companies. Your choices are you have a monopoly and you grow your top line 20%, or you do a bunch of acquisitions, or you leverage up, or you sell out. Those are your four choices. So imagine if I can't grow 20%, I got a problem. But what happens when the inflation rate goes to 20% and you can't grow 30%? Okay, at that point, it's pretty hopeless. So I kind of realized that I had a good business, but as a public company, it's dead money because the investor's view is they want you to grow faster than the hurdle rate, or they just rather you roll over and die. It's like, if your father or mother was a doctor and they had a practice and they were doing good business of delivering babies and saving lives, and the inflation rate's 25%, and you said, Mom, Dad, are you going to raise your prices 25% this year? Like, no, my customers can't pay 25% more. Okay, so roll over and die. Like, what? So I got to roll up the business and end it? There's something in our society, right, where I think it's pretty obvious that you probably need doctors and dentists, even if they can't grow their companies 25%, you need them. But somehow in the public market, the public investors are of the view that if your company can't grow 25%, you're worthless. And so there's a dichotomy, and you can see that if the central bankers crank up the inflation rate from 3% to 7% to 10% to 15% to 20%, what you're doing is you're tilting the playing field in favor of the monopolies and the manufacturing businesses against the small businesses and the manufacturers and the craftsmen. and eventually you're just destroying anybody that's not highly automated and highly capital intensive. And I saw it viscerally. 99% of my competitors went out of business. Well, I am literally the last man standing in my industry. Like you might go check. I don't think there's no CEO in the enterprise software business that stayed in their job, longer than me. 99 out of 100 CEOs in my industry went out of business. The companies that I compete against gone. And people think, oh, it's just competition. Well, it's partially competition, but it's partially monetary policy. So, coming back to this entire issue, I kind of was aware that that wasn't going to work, and I didn't need the capital. I was going to generate cash. And, and you're saying, well, how do I view the volatility? Well, I've got a cash cow, and what I need to be is I need to be an asset-rich company, because if you're an asset-rich company with property or some kind of assets, then it's kind of like putting up a sail. Like you're in a boat, you're in a rowboat, you're rowing at 7 knots. The wind is blowing against you 7 knots. You're not going anywhere. Then the wind is blowing against you 14 knots. You're going backwards. At that point, you have this realization that you're never going to get to your destination and you're going to die at sea. It's like that guy, it's a sad story, right? I don't know if you noticed, the guy that was trying to row across the Atlantic last week and he died. It's very sad. But the problem is, if you can't outrow the current or outrow the wind, then you're going to die. And so I'm in a rowboat corporately, and the wind, figuratively speaking, metaphorically speaking, is the monetary inflation rate. So you can keep working harder, like that horse and animal farm or whatever, just keep working harder till your heart breaks, or you can do something. And the something is you put up a $250 million crypto sale. Okay. And then you make it a $425 million crypto sale. And so now I got a $500 million sale. If you have a $500 million sale and the monetary inflation rate's 20%, you're going to get a $100 million shareholder gain a year. And so at that point, you can see if I had 500 million in cash yielding 0, and I generate 100 million in cash flow, and if the inflation rate's 20%, then the 100 million in accretion is offset by the 100 million in dilution on the balance sheet. And in essence, 2,000 people row as hard as they can to go nowhere.
Yeah, you're just treading water. Yeah.
Right? On the other hand, when I flip the 500 million in cash to 500 million in Bitcoin, at that point, if Bitcoin trades up 20%, 30%, right now I've got 100 million plus 100 million. Now I'm going somewhere. Right now I've got 200 million in accretion instead of 0 in accretion. And at that point, you go borrow another 500 million. If you go short the dollar, you borrow 500 million, and now you got $1 billion crypto sale. Now the 20% inflation rate generates 200 million a year. Put another 100 million on top of it, you generate 300 million a year in shareholder gains. Divide it by 10 million shares, you got $30 a share. Now you can have a $300 or $600 stock, right? So I was aware of the volatility. But let me put you back in the ocean. You're in the middle of the Atlantic Ocean. You're going to die because you're rowing. And somebody says, hey, I got an idea to save our lives. We'll put up a sail, and then we're going to turn and tack with the wind, and we're going to sail with the wind. And someone else says, the wind is kind of gusting. Sometimes the wind goes away, and sometimes it changes direction, and we're going to have to continually trim the sails, and we might occasionally shred a sail. It's like, yeah. But I want you to roll back the clock and try to figure out whether, the new world would have been discovered on ships with no sails. It's like you're not getting anywhere without using the wind. I mean, the history of the DuPonts, right? The DuPonts came to America because they were Huguenots, I think, and they couldn't own property, and they were run out of the country, and they had no future. So they decided to come to America. They get in a sailing ship. It's supposed to take 6 weeks. captain gets lost. It takes 12 weeks. They run out of food. Everybody's half starving to death. It's like people think they take all this for granted, like this is easy. No, I mean, people that came to wherever they came to Australia, America, wherever it was never easy. I mean, they were dying along the way, right? The mortality rate from Amsterdam to Australia is like 30% each way. 100 people get on a boat, 30 people die before you reach your destination. It's like, it did not used to be easy, but that's with a sail. Yeah. And so you can say, well, were you afraid of the volatility? Well, I was certain I was going to die with the rowing. And so, or I was going to get tossed on a stormy sea of fate. And my view is better get tossed around by the stormy seas of fate than a certain death in a rowboat. And, so that's what I think about that. I'll make one more point on the future. If you want to model any given system, if it's an adiabatic system, it's a closed system. It's like a wind tunnel. It's one of those. It's a tank. That you're using to test your hull designs. If the energy is completely predictable and controllable, and there are no new sources of energy, there are no uncontrolled variables. And if you run the experiment 10,000 times, you can probably find some resonating frequency, and you can find some patterns, and it becomes predictable, right? Like vibration, it's predictable, exchange of forms of energy in a closed system. But as I said before, if Godzilla shows up to the kids' playground, then all of your models, they're all irrelevant and broken. It is true that, it's totally true that if I deal you double aces, then you have an advantage in the poker game. But if I take out a gun and point it at your head and say, give me your goddamn money, the double aces don't give you an advantage in the poker game anymore, right? The point is the system changed. There are new developments. And so I think the people that have lived in the crypto industry for the last decade, they lived through a very difficult time. And I respect that, and their lessons are their lessons, and you should respect them for what they learned. But just because you lived through the first decade of the industry doesn't mean that you can draw upon solely your experiences and your data sets to extrapolate the second decade of the industry, right? You fought wars with bows and arrows and spears your entire life, and I show up with a bunch of dudes with machine guns, and then you want to call the battle strategy. And the point is, you're fighting the last war, and like there are elements of what you learned in the past decade that are relevant. But let's just deal with the elephant in the room here, which is, if you look at Bitcoin and you look at all the other cryptos, there's a crypto economy. It's got its own future. It's very complicated and murky. We could talk about it for 3 hours. There's competitive issues, security issues, regulatory issues, nation state issues, complicated. Then there's Bitcoin, a digital property on a dominant network. It doesn't need any of the other crypto whatever to be successful. For Bitcoin to be successful, there are any of 10,000 entities. The Sovereign Wealth Fund of Abu Dhabi, the Sovereign Wealth Fund of Saudi Arabia, the Qataris, the Emiratis, the Norwegian Sovereign Wealth Fund. Every public investor, every macro investor, every large company on earth, any municipality, any state, any government, there's 10, 20,000 people, they go to sleep tonight. They could wake up tomorrow morning and they could say, I think Bitcoin looks like crypto gold. I'm going to go ahead and put 3% of my portfolio in it. That means I'm going to buy $4 billion of it. I'm going to buy $4 or $5 billion of it. It's nothing to me. It's nothing. It's like figure out how important 2% of your money is. It's like that deal. It's like, I noticed it. I'm going to put 2-3% of my assets into it. We'll see where it goes. LFG. and they put the news release out on the wire, and Bitcoin doubles or triples. And then, if the sovereign wealth fund of some Middle Eastern state did it, if they bought $5 billion, these people have $500 billion. Like the intelligent sovereign wealth funds, they're not, the central banks of smart countries, they're not sitting on a bunch of long dated T-bills. They're not holding a bunch of sovereign debt. They're holding Apple, Amazon, Facebook, Google. It's the day that a Warren Buffett gets up and he says to some dude that works for him, I got 50 billion, figure out something to invest it in. And the dude says, oh, well, we bought $10 billion worth of Apple, and then Apple triples. And Warren Buffett made more money on Apple stock, which was a delegated decision by a dude. He made more money on Apple stock than he made in his entire life, and he's acknowledged to be like maybe one of the most successful investors of the last 100 years. And yet the thing he made the most money on was like an afterthought. So back to what does this mean to Bitcoin? It's like some dude with a $400 billion balance sheet can delegate to a portfolio manager to look at this thing, and that portfolio manager can say, I'm going to put 2% into it. And if you pick up the paper and you read that the sovereign wealth fund of such and such state bought $5 billion worth of it, what happens is the next 5 countries, they think they'll put $5 billion into it. And then what happens next is somebody at Google will say, I guess we can hold $5 billion of it. And then somebody at Goldman Sachs or Morgan Stanley will say, I guess we probably should grab some. And then Ray Dalio with his 50 billion or 100 billion or $150 billion, okay, well, I guess instead of like 0.5%, maybe 3%. Okay, and then all of a sudden Bitcoin spends from 40,000 to 150,000, 200,000. And I guess what I'm telling you is there's 10,000 people that could make $5 billion in 30 days if they wanted to bend over and pick up the money without taking a risk. And it's literally like they might just notice you. They haven't really noticed you yet. And that being the case, Kobe, everything for the past 12 years, right? And I was listening to the Kobe broadcast, but it's like 4 hours long, by the way. It's the longest stinging podcast. Like, and to your credit, guys, I didn't want to speed it up because I was kind of enjoying the banter. So like, if I was just in it to cherry pick some facts, I would have watched it at 2x speed. But I kind of enjoyed it. So I got like halfway through it. I haven't got all the way through it. There's a lot of stuff that I don't know. Sometimes I learn it the hard way when I get beat up by the Hornets about, being oblivious to the New York agreement or the block size wars or something. So, I'm still learning, but at the end of the day, the future is going to be determined in part by the past. And in part of it is what the crypto industry thinks and does. But a lot of it is a function of what one regulator could get up tomorrow and put out a press release that would double the market. Any politician, there's probably 200 politicians. There's 10,000 big companies. There's 10,000 big institutional investors. There's 10,000 big governmental entities. Here's the big idea. The things at a tipping point, you don't need them all to agree. You just need anybody to agree. All you need is 1, 2, 3. 1 will tip 5, will tip 25. And then you spin up by an order of magnitude. So when will that happen? I don't know. Like, is it an if? It's not an if, it's a when. It will happen because I can't really imagine that we live in a world where 30,000 people don't want billions of dollars of money. Like sometimes I'll talk to these big investors and they'll say, well, what's this thing with Bitcoin? I say, well, it's digital properties, the dominant global digital asset network, and it's a lever. And here's the reason it's better than credit or bonds or real estate. Here's how it fits in your portfolio. And they're like, I got to think about it some more. And I try to always be very polite, but in the back of my head, Like, I'm like, you have $25 billion in your portfolio and you generated 2% yield last year, which is downright embarrassing because the S&P was up 25% and a freaking robot could have got 10x what you got. And I'm thinking, you must not like money that much. like I'm listening to you. I'm telling you, take $1 billion, take $2 billion, buy Bitcoin, put out a press release, explain why you bought it, and wait, and you're going to double your money. You must not like money, right? Like, because it would take you, I don't know, not that long. It's not easy to make billions of dollars. It's not easy. But there is one easy way, Bitcoin. Bitcoin's easy way. And it all comes down to what's your balance sheet, right? It used to be that someone with $50 million could lean on it. You saw our impact. We started with 500 million. We really started with 250 million in capital that we could invest. And so now we're up to 5 billion. But what happens when someone comes in starting with 5 billion, right? And I think that the future is a function of what everybody else in the world does. And there's a lot of people that have a vested interest in discovering this. This is a solution to a lot of problems. It's a big tech solution. If you're Apple, you can take your market cap up by $2 trillion. Okay, so does someone at Apple want to make $2 trillion? Presumably. There are certain big tech players that will remain nameless, or even exchanges. I'm like, certain exchanges that will remain nameless. You take $1 billion, you buy Bitcoin, you put it out on the wire, Bitcoin trades up, your stock trades up, right? So there are a lot of big tech companies, Apple, Google, Facebook, Amazon, Microsoft, to just name a few. They could make $100 billion to $1 trillion. Will they? Not all of them, but somebody will. You've got all the nation states. Let's take Turkey. Turkey could print $1 billion worth of lira, buy $1 billion of Bitcoin, and denominated in lira, double the price of Bitcoin in lira, right? It's a simple trade. In the Emirates, they could just buy $1 billion, 10 billion of Bitcoin with DRAM. Right? They have their own currency. Take your own currency, convert it into property. It's a reflexive trade. It doesn't work for the last entrant to the market, but it works for the first 5%. So it's an obvious trade for a nation state. It's an obvious trade for any company. Like a company. Let's take my company. What did I do? Well, first I took existing cash and I bought Bitcoin. Then I borrowed money and bought more Bitcoin. Why was I able to borrow the money? I was able to borrow the money because the stock traded up because I bought the Bitcoin, right? So buying the Bitcoin drove the stock, opened up the opportunity to borrow the money, opened up more opportunities. And in the third and the fourth quarter, we sold $1 billion worth of stock. We sold $1 billion of stock, blended $700 a share. You remember what the stock was at when I started the journey? Okay, so what's going on is I'm backing the equity of the company with an asset which is stronger than a currency. The equity trades up, all the securities of the company trade up, and then I borrow money to buy back into the balance sheet. So today, say what you will, we're sitting on $5 billion or 124,000 Bitcoin, right? Which is an asset as opposed to having a liability. And we got there in 18 months. We got there from August to today, right? About 18 months. You could do the same thing with a country, because a currency of a country is like the stock of a company. And if you're a municipality, like a mayor, the mayor of New York, if you go check New York municipal debt, they can borrow money at 1% interest. New York could go borrow $1 billion. I mean, here's the real Bitcoin bond. You borrow $1 billion at 1% interest, you buy Bitcoin. Better idea? You borrow $10 billion at 1% interest, you buy 10 billion of Bitcoin. So do this thought experiment. What would happen if you woke up and you read a press release from the mayor of New York saying, we just issued $5 billion of debt, and we're going to buy Bitcoin with it to fix the balance sheet of New York City? What do you think would happen to the price of Bitcoin?